Last time we spoke was May 9th, so almost exactly 3 months. Today is August 5. And you weren't as bullish on uranium in the short term. You thought more pain was to come. Looking at the state of the affairs today, are you bullish or bearish on uranium over the short term?
Bullish.
Okay.
Bullish. I had assumed that the wave of buying that we saw from Sprott and others probably had caused yellow cake, but more particularly the stocks to get ahead of themselves a little bit again. The malaise that's occurred in the uranium business has taken the froth out of the market. The momentum players, they're chasing, sort of GameStop memes again. They're away from uranium, which means that the uranium market has returned to sanity. Meanwhile, while the market has returned to sanity, the fundamentals get better and better and better. The first thing that's fairly obvious is that the political winds in Japan now favor restarts, and we're seeing restarts. And for me, the easiest near-term turnaround in the uranium business has always been the pace of Japanese restarts. Taking inventory that was once held for fuel and became held for sale and making it held for fuel again, while increasing the amount of uranium consumed, particularly when you do so in tandem with the removal of almost 40% of the world's enrichment and re-enrichment capability in Russia, taking that out of the market, can only be near-term bullish from my point of view. If you add the Japanese restarts to something that never entered my calculation, which is to say the slowing pace of retirement, even perhaps in Germany, the fact that uranium demand that I thought was going to go to demand heaven, in other words, plants that I thought would be permanently shuttered, in Europe in particular, don't seem like in the near term are going to be shuttered. Certainly, I'm not envious of the circumstance that people in your part of the world may encounter this coming winter. I think the likely outcome of that, in the absence of peace, which is really the outcome that I hope for, but in the absence of peace, the outcome of that is that the failure of the European strategy around alternative energies will be very, very clear from a consumer's standpoint. And the near-term remedy is going to have to be nuclear and coal.
Right.
And I imagine that the political pressures in various parts of Northern Europe will preclude the elected left's ability to close nuclear power plants until more grid stability returns to Europe.
And I was just thinking what else I was talking about last time. And these things were not as clear last time when we spoke in May, like the things going on in Germany. There's just a lot more. It's become a lot clearer, I guess. And to get even more specific as to what you told me last time, you said that there will come a time in the uranium market to go all in. You said that there will be a time where the risk reward proposition is so much in your favor that you will have to go in as a speculator. Do you think that time is now, or did we miss it? Is it perhaps still to come? What do you think?
I think I'm going in early, but I'm allocating pretty aggressively right now. Sometimes, Antonio, you learn that things are cheap enough. I think I've said on your show before, Bernard Baruch, a pretty good speculator, once described a person who always bought at the bottom and sold at the top as a liar. He said it didn't happen. And I certainly put myself in that camp. I don't have the ability to call a bottom. I do have the ability to tell when things are, from my point of view, absolutely cheap, and when the juxtaposition of risk to reward is absolutely positive. And I think in the uranium space, from my own point of view, given my means, that this is a very appropriate time for me to broaden my participation. You'll note, Antonio, that I'm not by nature a trader or a speculator. I traded the uranium juniors not because it was my preference, but rather because the basket of uranium juniors that I followed was up, 300, 350, 400%. and they were selling for more than I thought it was worth at that point in view, at that point in time. So I sold them, and as a consequence, was labeled in social media by people who didn't know me very well as a trader. I bought those stocks with a 5-year perspective. The gains that I hoped to achieve over 5 years, I achieved in 9 to 12 months. When that happens, when the reason to own something goes away, the stock has to go away, and it did. Now I see myself reloading.
I remember you told me that when the reason to own something goes away, you should go away too. And it was a very aha moment for me. Is that, and we're talking specifically uranium here, is uranium the only thing that you've been adding, Rick, or does something else have your eye as well?
I've been selling some of my oil stocks. They gave me everything I wanted again. I had anticipated owning them for 4 to 5 years. And certainly my oil juniors gave me everything I needed. So I'm in a circumstance now where I can sell half my positions, with one exception, and recover my cost on the whole position, plus pay the tax associated with the capital gain. So I'm doing that. The extraordinarily negative bias against oil stocks that existed 2 years ago is gone. They've performed extraordinarily well. The financial metrics are all spectacular, and the companies are retaining their discipline. That notwithstanding, the prices are to the point now where they're much more fair. And although I don't consider the oil stocks inexpensive, I look at a circumstance where I can sell 50% of my position and get the rest of my position for free after tax as being a fairly attractive circumstance. I continue to look with favor at the gold stocks and a select few silver stocks. I would say the biggest change in my own outlook, Antonio, going forward, is that for the last 3 years, I myself have focused on bigger market cap companies, saying that the juxtaposition of risk to reward between the biggest and best companies in the space and the juniors, the tertiary stocks, was too small to justify the risk proposition of smaller stocks. Those smaller stocks have now fallen by 50 or 60%. And so what you'll see for me now is that while the rest of the world is on a risk-off trade, I'm on a risk-on trade. I'm revisiting very aggressively the sub-billion market cap space and the sub-100 million market cap space.
Okay.
And I suspect that for the first time in 3 years, sanity in pricing will return to the private placement market. For the last 3 years, the terms in private placements have favored the issuers decidedly at the expense of the investor. With the decline in market sentiment, dumb money is much less available. And the issuers who played chicken with capital markets and lost are, I think, going to have to return to markets. And I think that the incentives that they'll have to offer in terms of terms will favor the investor rather than the issuer again. Something that I look forward to after a 3-year absence.
I think it was Bill from Mining Stock Education to whom you spoke a while back that you told him that issuers are now back to calling you as opposed to getting the money elsewhere where they used to, with the stimulus check type people who were giving them that money. So I guess that's the time right now. And it's interesting to me that you mentioned the bigger companies, especially when you start talking into the $1 billion of market caps, something that I've largely stayed away from. I'm not sure I know why, but I wanted to ask you that because you call yourself fit, pretty, and rich all the time. But what if you weren't all those things, Rick? Would you still be approaching investing in the same way, or would you be going more aggressively?
Antonio, I hope so. I hope so. I can tell you that when I was young, I was much more aggressive. I got away with it, kind of. Your audience should know that my first pass through as a speculator went very well in the early days and went very, very, very poorly in the mid days. I've related that in past discussions with you. My net worth was briefly sub-zero, which was a consequence of being over-leveraged and over-speculative. It's interesting that most young speculators despite the fact that they have lots of time left on Earth, are very impatient. And most young speculators think about what they want, as opposed to being based on experience, think about what they might have. Many young speculators, perhaps because they have time to make the money back, are willing to take excessive risk in hopes for a 10-to-1 gain.
Yeah.
Now, I need to tell you, Antonio, all of the money that I now lend and invest prudently, I made by speculating wildly. But looking back at things, there were two differences. One, I got lucky, and nobody should assume luck. The second thing is that I worked extremely hard. I didn't have a life. And I'm not saying that with any pride, particularly. I was a very consistent 60 or 70-hour worker on one subject. And young people who hope to emulate my investing success need to understand that most other aspects of their life will suffer. That's the way that works. If you don't take vacations, if you work 60 or 70 hours a week for 50 weeks, the truth is that lots of other parts of your life will suffer. And I suggest that younger people should incorporate more balance in their life than I did in mine. I think also it's boring, but the eighth wonder of the world and the first wonder of the financial world is simple compounding. What you learn over time, certainly what I've learned over time, is that some of the investments that I allowed to sit in place and become better investments, where I experienced the benefits of compounding, led to really, really amazing increases in my material wealth. I'm thinking, as an example, about Berkshire Hathaway. But in the resource space, I'm thinking about Franco-Nevada. I'm thinking, too, about some real estate investments that I made in the early part of the decade of the 1990s, reasonably leveraged, but following a sort of a value-oriented strategy. Those real estate investments I've sold in the last 12 months because I think the period of falling interest rates is over. But when I look at the financial performance that I have enjoyed with the disciplined investment strategy, a prudent investment strategy, and then simply allowing time to work for me rather than against me, it's very difficult to understand at your age what happens to a sensible investment that's been allowed to mature for 30 years.
Those are somebody said it on a YouTube video, I believe, is that they when they're looking for advice, they imagine themselves at 70 talking to their younger self, what advice they would give them. And the work-life balance thing was very, very wise in here, I think. I want to go back to the thing that you're going more heavy on, though, right now, which is uranium and how you experience the current situation in the uranium market as a whole, like, and what it feels to you. Because, I mean, we have ramping M&A, we have starting M&A, I guess, with we also have increasing long-term contracting. We're seeing more and more of that. It seems like the bull has already left the station. That's not something you say. The train has already kind of left the station, but someone forgot to wake up the equities, right? That's how it feels. What do you think, Rick?
I think that's right. You have interviewed my friend Justin Hune, who I think is the best sentiment indicator out there for retail investors in uranium. And all you have to do is look at the number of views he gets now relative to the number of views that he got 6 months ago or 12 months ago, while at the same time monitoring the enthusiasm in the comments section to know that although the facts around uranium are indisputably better now than they were 12 months ago, the sentiment around uranium is very, very different. The narrative crowd is gone, and the arithmetic crowd is coming back, which I think is healthier still. People, even Justin, in fact, perhaps because he's so much younger than I, even Justin reacts with some confusion and bitterness around the fact that, well, the market has improved and the timelines for turnaround are shorter. The stocks haven't responded for immense periods of time, like 6 or 7 weeks.
Hmm.
If you're going to make money in this space, you need to think in 3 to 5 year time frames. And the speculators that got attracted to the sort of quantum increases in the prices of uranium juniors aren't yet skilled enough to think about the time frames that are required to make the money.